Kim, very good to see you. Today we are talking money market funds, the hottest investment that may end up costing you. Following several rate hikes by the Fed, money market funds are earning about 5% or more right now. They're so attractive, investors are holding a near record $5.6 trillion in money market funds right now. While these are seen as pretty safe investments, I'd like to ask you about the opportunity cost of pouring a lot of money into cash.
Yeah, so this is incredible. I think people haven't seen these rates for a very long time. And so having that high rate, it's just allowing people to pour tons and tons of money as you're showing there on your screen. And it's always a good idea for those that have those savings accounts to make sure that they're getting the highest rate possible. Unfortunately, a lot of those big banks have not increased the rates like they should. So definitely trying to improve your current rate that you've already had in savings into those accounts is a prudent thing to do. However, displacing other investments into money market can cost you to have further opportunity costs down the road.
Right. As you've said before, don't try and time the markets, right?
Yes.
So when choosing how much of my portfolio to allocate to cash, should my first question be, what's my time horizon?
Absolutely. Time horizon is everything when you're looking at what amount should be in cash. If you're having those shorter term needs, 6 months, 12 months, even the next couple years, having those funds in a money market position that's yielding a very good high rate is not a bad idea. However, if these are long-term funds, you're better suited sticking to tried and true long-term investments. One of the reasons being is just because these money market funds are paying an attractive rate right now does not mean it's going to stay here. So I have some clients, for example, that come to me and say, hey, Kim, bonds have been really bad over the past, now 2 years. Should we just be reallocating those funds to a money market position? Well, that's a little bit of market timing. So number one, if you do that, yes, you're going to get that good rate now. But what happens if rate drops? What happens if moving those funds back into bonds at that time is not the best time to do so? So we have to keep that in perspective. And that number one, you can never time these things perfectly. But number two, those rates aren't going to stay high forever. The expectation across the industry is that we will likely see rate cutting next year.
Okay. So as you were mentioning, the best way to build an investment portfolio and to preserve purchasing power over time, as we take a look at money markets versus bonds versus the S&P, we see here that a well-diversified portfolio is the best way to keep your purchasing power over time. So are we being short-sighted if we park too much money in money markets?
Short answer, yes. Being short-sighted, parking too much money in those attractive money market funds right now. Again, just as your graph shows, long-term, both bonds and equities win out. So it can be very kind of appealing and attractive to think, well, I haven't been seeing these returns lately in my current portfolio. Why wouldn't I go capture that right now? But again, you have that market timing risk. And those equity positions, the market, what I always tell clients is that the market doesn't always make a lot of logical sense on what you think that it should or would do. So if you're moving those positions to that higher yielding money market account, that could be at the exact same time that those equities would really start to rebound for you. So having that overall underlying structure of a portfolio that are designed to do different things, it's good to stick to your plan. That's what's the most successful long term.
So just going to say it all comes down to having a plan. So Kim, if somebody wants to build that plan with you, what's the best way to get a hold of you?
The best way to get a hold of us is to go out to our website, www.young-wm.com, and you'll see the several ways that you can get in contact with us. And we'd love to speak with anyone that have these type of questions.
Great. Kim, thank you.
Thanks.